Eliminate problems most traders have. Today I want to focus on the problems that I think can be overcome really fast and easy, and that I think are stopping a majority of new traders from becoming successful. Problem 1. Changing your trading system every few months. I know that every few months you are going to see some new fancy system coming to the market, and every system will promise you easier and faster solution to make money. But technically speaking, if you start one system, you don't have a time to fully test that system and see if the system is working for you or not. I don't say that every system will work, but you need to give a system a time. You need at least 3 to 6 months just to get a feeling for the system, just to master something. And if you're trying to get that easier and easier solution every single time, you will just get stuck in that loop of buying a new system instead of trying to master the system you have. And I know this happened to me when I started to trade. I think I tried over 50, 60 systems until I stuck with one system. And of course, none of those systems that I learned didn't really work for me. But it's not because the systems were bad. It's more that I really didn't fully master any of those systems, and I was just thinking about how to find something easier because I was lazy like most people, and I only searched for the easiest solution to make money. But from my experience, that's really a bad thing. I think the system that worked best for me, and it was the hardest one to learn, was the Elliott wave. It took me over 2 years to fully master everything and to become profitable Elliott wave trader that can live from trading Elliott wave patterns. But overall, it was the most interesting one. Right now, I don't want to go to the next system until I'm fully satisfied with the current system. And also, every time I'm fully satisfied with my system, it's going to be much easier for me to automate that later on. That's why I say you need to give a system a try. You need at least, let's say, 6 months of learning the system, playing with the system, practicing, seeing what you need to improve to increase the win rate. And only after, let's say, 6 months, if you think that this is not for you, you can move on. But I still want you to give a try for at least 6 months before you decide, is this for you or not? Problem 2. Trading without a proper plan. Everyone wants to just jump into a trade because they got a signal, and that's all good. But technically speaking, you want to have a proper plan for every trade. When I started to manage money for other people, when I first got a larger client, he told me, okay, I will give you 50K to manage for me, but I have one condition. And the condition was that I can trade only the pairs and setups that I previously have written a full plan, at least 2 hours prior to entry. And that wasn't something I ever done. But after a few trades with this approach, like writing down everything, a full plan of why I want to enter a trade, I really start noticing a big changes in my trading. I only got a 1 losing trade and everything was working fine. I was more relaxed. After that, I figured out that when I have a plan, it's going to be much easier for me to execute that plan on time. So don't try to trade if you don't have a full plan. Why are you doing something? That's why for a system, it's really important that you have a strict rules that you are going to follow. So it's going to be easier for you to write down the reasons and convince yourself why you are doing something. And if something goes wrong, you can go to that plan and see what you need to do. Problem 3. Failing to adapt to current market conditions. A lot of traders, especially new traders, don't want to admit to themselves that market is changing. Every single year, it's slightly different. It's not a big difference from how we trade now versus how we traded like 50, 60 years ago. But still, every single year, we are seeing a little bit of different market conditions. For example, we have strong moves now that are coming, let's say, from a Twitter. Just because Trump is tweeting, market is moving. And we didn't got those kind of the things few years back. So you need to be aware that market is changing and you need to adopt all those changes if you want to succeed in trading. If you want to go and rely on what worked 10 years ago and stick to that and you don't want to change anything, there is a good chance that your result will drop year after year. Problem 4. Expecting to become rich overnight. I think this problem the most of us still have. But for this part, I blame a marketing team behind the broker houses, behind the Forex products, because they are claiming that you are going to become rich overnight just to get your money. But how much I wanted to become a millionaire in, let's say, 6 months, it took me, I think, over 6 years and a lot of hard work. Think about trading as something that will make you money, but it's not something that will make you $1 million or 100% or 200% every single day. It's not how everything works. If you want to go with that route of trying to make 100, 200% day after day, you're in the wrong profession. You have more luck playing poker or something else, but in trading, you can't become rich overnight. Problem 5. Trading without a stop loss. There are a few reasons why traders trade without a stop loss. The first one is because someone told you that you are just limiting yourself if you're using a stop loss. Market must move higher if you're in the short trade or must move lower if you're in a long trade eventually. And I've seen this a lot of times. I have a lot of students that come to me with a position that they are holding for 6, 7 months. And I got one guy that held the position for more than 2 years and position was in the negative 100K. The reason why they were holding a losing position was because they had that idea in mind that market must turn around. But in my opinion, it's a waste of time. You can't control the market. You never know if market is going to ever return to your level. And if you hold a losing position for too long, your focus will just be on that losing position. So you can't fully function as a trader. You can't generate the new ideas, and that's your entire goal. So always have a stop loss. Don't try to find the excuse why stop loss are bad. The second reason why traders don't use the stop loss is because they think the large banks or hedge funds are going to see those trades and they are going to trade against them. I'll tell you right away, market doesn't work that way. Plus, no one really care about your 1, 2, 3 lot trade. So it's really a waste of time. Big banks won't trade against you. FX is really a large market. So you must have a stop loss. You must have defined risk for each of your trades. Problem 6. getting advice about the markets from popular financial television programs or sites. Every one of us done this part in the past. We all listen to some guy on a TV trying to give us a prediction of a gold or Bitcoin, or doesn't really matter what asset. And we are all thinking that they must be right because otherwise they won't be on a TV and they must know something. But overall, that part will never work. First of all, their job is to get more views. Their job is not to make you money. And let's use gold, for example. If someone tell you gold in the next 6 months is going to go to 100,000, you are going to look to buy a gold just because it look massive. But if someone tell you gold is going to move, let's say $2, $3, $5 only in the next month or so, that won't be something that you really want to see or hear on a TV show because that's boring. Their job is to force you to think that something big is going to come and to grab your attention. Their job is really not to help you to trade. Of course, I have a Bloomberg on my TV right now, but I don't listen for advice from someone from Bloomberg. I use it to hear what's going on in the world, but I don't care what their opinions are or other people's opinions are on anything. Because whenever I hear some crazy number, I know it's not going to work. Sometimes maybe they get lucky. That's fine, but it's not trading. That's called gambling. So I want you to stop trust someone from TV to tell you where to trade. Problem 7. Blaming your broker or high-frequency trading algorithms for your losing trades. Everyone done. I blamed my broker. But at the end of the day, especially now, there are so much regulations and the brokers are really never going to try to cheat you because they know that if they cheat you for even a $1, that can cost them millions and millions of dollars. Maybe when I started to trade 10, 11 years ago, there was slightly different approach when it came to broker houses. There was a lot of irregularities, but now I really don't think that any broker that have license from, let's say, US, UK, or let's say Australia will do it. There are too much institutions controlling that part. So don't ever think that the broker is trading against you. Also, blaming high-frequency trading algorithms for your loss is a waste of time. We all know that we have the good algorithms and that's all great, but first of all, they're not trading on the MT4 broker. They are probably trading on a futures exchange. So they really don't see your stop loss. They can't affect anything. So you don't need to blame others. The only person that you should blame about your losing trades is yourself. Also, keep in mind that there is no such thing as having 100% win rate. Even the best algorithms out there have a losing days, a losing weeks, a losing month. Don't think that professional traders win every single trade. Keep that in your mind and you are going to be fine. Problem 8. Not paying attention to correlation between currency pairs when picking new trades. Every market is more or less correlated. So trying to have the pairs from the same, let's say, currency group or pairs that have a good correlation is not always a good thing. Just because you don't want to add more to the risk. Because if one trade don't work, the other one also is more likely going to fail. If you are seeing For example, that let's say gold is pushing lower strongly, you can expect that Aussie and other commodity pairs are going to follow that. So don't try to skip that small details that can help you staying at the right direction. But we are going to talk more about the correlations in the later videos. Problem 9. Trying to measure your and others' results in pips. I know it sounds really great when you say to yourself or when you see that someone made 1,000 or 10,000 pips in their trades. But that 10,000 pip trade really don't make any sense to me. First of all, since 10,000 pips trades usually come from something like a gold or some stock compared to the idea of coming from a currency pair, because 10,000 pip move is not going to happen that fast. Second part, maybe someone made, let's say, 100 pips today, but they only earned a $1, while someone made a $10,000. So it's much better when you see that someone is making a lot of pips, if you want to see if they are a good trader or a bad trader, to ask them for their return in percentages. Because it's much better for me to see a consistent wins of 2-3% in return compared to the idea of seeing 510,000 pips in their result, because really pips don't make sense to any professional trader. Every time I see someone claiming that they made a lot of pips, I know that they're probably a scam service, nothing else. For example, if you know how to structure your trade, what lot size to open, even with a 5 to 10 pips move, you can make more money, more profit in terms of a percentage return compared to someone that made 500 pips today. So it's all about the risk management. Problem 10. Adding to losing positions and doubling up after a losing trade. I usually see people making these two mistakes always together. First thing is that if you have a losing trade, it's better to cut the losing trade compared to add to losing trade. Trying to get that better break even just by adding to the losing trade is never going to work. And if you try approach that, if you lose, let's say 1%, you open double the lot size next trade, trying to recover everything faster, will never work. I tested this part with a lot of algos, and that approach will never work consistently. This part can work maybe in the betting or playing poker, but trying to trade and using that doubling up idea is never going to work. So I want you to forget that right away. Problem 11. Expecting the same results after you switch from a demo, so practice, to live or real money account. Everyone can make money on a demo account. It's not that every single person will make a profit on a demo account, but a lot of people start with a demo account. And I like that approach, since you're not really risking any money and it's good for practice. But when you switch to live account, you get that part of emotions that come in, just because you didn't got emotions while you open some demo trade, because you know that if you lose, it's really not going to affect your overall balance. But at the first trade on the live account, you are going to start getting that emotion that will start playing a game in your mind. And a lot of people see a drop. I think last time I checked, it was like 20 to 30% drop in an overall win rate for the first month when you switch from a demo to a real account. Don't pay that much attention on that. I want you more to focus on trying to going smaller when you go to a live account compared to the idea of keeping the same lot size that you use on the demo. Try with the smallest possible lot size for the first month. See how that emotions are going to affect you, and if you can handle everything the same way as on demo or a little bit worse, you can always start increasing your overall risk. But at first, I want you to use the smallest possible lot size that your broker offers. I don't want you to go with the idea of losing a lot of money. It's better to risk the smallest possible amount and better to give up of a potential profit for one more month compared to the idea of losing entire account. Especially if you never traded before, you must understand that majority of new traders lose their first account. So just go small, feel the market, see how your emotions are going to work for you, and see what we can do to help that. Problem 12. Thinking about trading as a hobby. For me, trading is a full-time job. Maybe it wasn't when I first started because I couldn't live from trading. But overall, you need to think from the beginning that trading is your job and treat that as a real business. Trading is not gambling because you have a full plan. It's more a probability job, like let's even playing a poker. How much people think about the poker as a gambling, it's proven that this can be a real job. People make millions. Same go for trading. I also made really a decent amount of money in the last 10 years from trading. So I know for me, this can be a job. And for you also, this can be a job. But you need to treat that part as a job, not just as a hobby or some gambling part that you are going to try for a few days and that's all. You need to treat it as any other job. Problem 13. Expecting to earn money with a $100 expert advisor that you find on Google. I bought, I think, 3 to 4 algos. I invested $300-400 in buying a few algos when I started to trade because I was thinking, okay, this is going to be easy. I'm just going to load them, go out, and every day I'm going to make money. But that part really never worked for me. I didn't even get my money back after a 6 month of using the algos. And every time I looked at their statement report, I seen a completely different picture from what I seen from my account. They were making money, I was losing money. And later on, after working in the hedge funds and the banks, I realized why that's the case. First of all, to build a perfect algo for you that will actually work, you really need to spend a lot of money. Really a lot of money. In between 50K is the minimum. And if you want a really decent algo, it's going to be 100K. So you need 100K only for the algo. And you think that if I spend 100K on the algo, that I would sell it for $100 or even $1,000, not a chance. So stop trying to waste your money on some bad EAs. I know they're never going to make you money. You know that, but it looks easy plus it's cheap. Of course, when you start trading, that $100 looks as a reasonable investment. Because most traders will start trading with, like I started to trade with a $500 account. So it made sense to me to pay $300-400 for a few EAs that promised me to make me rich. But if I got, let's say, a $500 account and someone asked me to pay them 20-30K for the algo, I would probably say, no way, it's too expensive, you have it cheaper. But now I know better. So I don't want you to go over the same problems I have. And the reason why you will never make money with the EA is simple, because you don't understand the system. You can't expect to believe in something that's going to work for you, but you really can't control that work because you don't know how that EA work, because it's a secret. For example, I can now build the algo and it's going to work. But the reason why it's going to work is because I can control the algo. I can check manually the algo, see if it's following all of my rules, and that's fine. But you won't get that system on that $100 EA that you will find online. So just stop wasting time on that. Problem 14. Not expecting the unexpected. You will never know exactly how any pair will end the day. Maybe it's going to be a 20 pip move, maybe 100, maybe 1,000 pip move. But what you need to be aware always is that you always must be prepared for the worst possible scenario. Don't think that just because market is stable now, that market is going to continue to be stable for the next year or 10 years. So I want you to always just have in your mind that something unexpected can happen, that maybe some news will hit the market and the news that can cause a strong and sharp move. Always expect that unexpected. Problem 15. Not paying attention to relevant economic releases. We have a lot of news coming to the market every single day. It doesn't mean that every news will make some decent and strong move. But usually every single day you will have on average 1 to 2 news that can affect the market. Maybe 20, maybe 30, maybe 50 pips. So I want you to start checking that FX calendar to see the news that are coming today. We are going to talk more about the news, how to read the news in the later videos. Problem 16. Not keeping a trading journal. You can use platforms like MyFXBook, or you can just use Excel or Word and just put there all of your trades. The only reason why I want you to have a trading journal is to help you to understand what you are doing wrong. Because if you start writing down every single trade and the reasons behind that trade, you can go and find out easily what's been working for you, what's not been working, and you can adjust. You can always improve your own trading. But if you're just playing the market, like buying, selling, without keeping a track of your trading, you can't, technically speaking, improve. You'll never get to that professional Forex levels. I'm keeping the trading journal for the last 9 years, and I'm still till today keeping my trading journal. It doesn't need to be something crazy long. Just type the reason, put the chart there so you have a picture to see later on of the pair prior to the entry, so you can go and analyze that, and that's all you need to do. Problem 17. Not practicing what you learned about trading. This part is a problem that a lot of traders have. It's not that new traders have just this problem. A lot of even advanced traders have this issue, because you are always learning something new. Every day you learn something new, and that's good. But if you don't practice what you learn, you really don't have any benefit from your new knowledge. For example, if you learn about the chart patterns, it's going to be a waste of time to not spend some time practicing drawing them and finding them on your chart. Because it's fine that you know the rules, but when time comes and when you see them on the chart, if you didn't practice them, you're never going to be able to have any advantage knowing how flag works, what's going to happen after a flag. So I want you to practice not just the chart patterns, everything that you learn. Spend time practicing. Problem 18. Risking more than what you can afford to lose. Every one of us done this part. We all say that we can afford to lose this much, but at the end of a day, if you look your track record, you'll see that there will be some trade where you risk more. And it's more agreed and that idea that you want to become rich overnight that's playing a game here. But I really want you to limit yourself. So define now how much money you are fine with risking. The best way for this would be to just see how large account you have and just go with that idea of risking a 1%. And that part will usually work for most people. If you have a larger account, you can drop that to the 0.5%. But let's say if you have $1,000 account, risking a $10 will be acceptable. But if you have $1,000 account and you lose $100 per trade, that part won't be that acceptable to you and your mental shape, trust me. And I want you to feel fine every time when you trade. Even if you lose, I want you to still be fine because that loss didn't affect you that much. I don't want you to trade when you are stressed out or you are thinking about how much money you just lost. So I want to keep that risk at minimum at all times. Problem 19. Overthinking your trades. You have only a 5-second to make a decision if you want to enter a trade or not. Every time that 5 seconds pass, you will start thinking about the reasons to convince yourself why this is not a good thing. So I don't suggest that you just open every single trade. I want you to have a reason for entering a trade. I want you to analyze the market. But if everything is aligned and everything looks fine, I don't want you to continue to think about the reasons why you don't want to enter this trade. For example, if you found a setup that's looking good, everything is confirmed on the 15-minute chart to go long. But on 4-hour chart, it's showing short. And we'll start thinking maybe it's not a great idea because higher time frames are not matching or other things around. I just want you to say, okay, everything is fine. I've written down my plan and I want to just to press that buy button and that's all I want to do now. You have, like I said, 5 seconds to do that, or trust me, you will start thinking about the reasons how to skip the trade. And it's simple. Your brain will never tell you to trade right away because it's trying to protect you from what's going to happen next. And it's always going to try to pick that easiest possible solution for you. And that would be to just skip the trade. This part is something that will be easier and easier after you've done 1,000 or 10,000 trades. But still, if you just write somewhere down, I have 5 seconds to decide, trust me, it's going to be much easier for you. I don't want you to overthink your trades. If everything is aligned, just go for the trade and that's all. If you have a plan, you're just following the plan. Problem 20. Not analyzing your trade results each week. You don't need to analyze your trading journal every day, but at least once per week. Even if you don't want to go once per week, go once per month. Check all of your trades. See what you've done wrong, what you've done good, and see what you can do next week or the next month to improve your result. What trades you are not going to take this week, what trades you are going to increase in size this week, and analyze and try to improve your trades on a weekly basis. That's the only way how you can become a successful trader, you need to analyze your trades. You need to see how to improve them. And it's always a testing. It's never going to be that part of, I don't need to analyze my trades. I'm doing that for 9 years now. Like I said, I'm trading for 10, 11, but I'm keeping the trading journal for 9. And every single week, I'm going to go over all of my trades, see what was working the best in the previous week, what was my mistakes, what should I change for the upcoming week. And that's the only way I keep making profit month after month. That's the only reason. Just because I can admit to myself, okay, I need to change this. Maybe last week I didn't pay attention on the news that much, so that's something I want to improve this week. Problem 21. Trying to predict when the trend is going to change without waiting for confirmation. I know that the first rule of trading is to buy low or sell high, but most people just want to try to trade at every high, look to short, or at any push down to look for a long position without getting any confirmation that they are trading in the right direction. First of all, you will never be able to say exactly at people where the market will turn around. Trend can last a day, week, month, year, decade. So don't try to force yourself to always be the first in and the first out. It's better to wait for some sort of a confirmation from indicator or maybe some news that will confirm a potential trend change or a reversal, compared to the idea of just trying just because you reached some new high or maybe a new low. Problem 22. Watching your profit and loss P&L constantly through the day. Everyone likes to watch their open orders, but watching your P&L will just have the negative effect on you. It's the same way that we said you have that 5-second rule. The more you watch your trades that are currently open, the more you are going to try to find a reason to close a trade. And especially it's bad if you have a losing trade going on, just because your focus will be on that loss. It's not going to be on searching for the new trade. It's going to be that you are losing, and right away your mind will try to tell you it's time to either cut the trade or it's time to just add to the losing trade or trying something stupid. Trust me. So you need to understand that you had a reason to believe that this pair, for example, maybe Euro USD wanted to move higher today. So you had a strong conviction about that. So you had the full plan. And if you had a plan, you know that you followed your plan. And watching that P&L is never going to have a good effect on your trading. You can't change the market pricing. How much we would all want to have some impact on the market, will never be able to affect the market, even for one single pip. So just close that P&L window, focus on the new trade, and that's all you need to do. Problem 23. Opening a new position through the entire day. It's good to have a lot of positions, but you need to know when to stop. Because if you have a lot of losing trades, you're going to try that revenge trading, and it will never end great. So you need to have some sort of a limitation for yourself that will tell you, okay, now it's time to stop trading. Or even if you have a lot of winning trades in a row, like you have 5, 10 winning trades in a row, you want to know when to stop trading. Just because when you have a lot of winning trades in a row, you are going to think that you can't lose money. So instead of quitting while you're ahead, there is more than a good chance. And trust me, when I say a good chance, it's over 85% of the chance. I've done a lot of research on that part, is that you are just going to return entire profit to your broker till the end of the day. We are going to talk more about this when we talk about the risk management. Okay, guys, like I said, I can talk about that small problems all day long. I think these 23 problems should be easy to fix. So I don't want any of my students to have those kind of the problems. We are going to talk about more problems in the later videos. Take care, guys, and I'll see you in the next video.